my window.
Hello, traders. Gary Wagner with the Gold Forecast here. It is the 26th day of April, Tuesday, approximately 10 a.m. in Honolulu, Hawaii, and this is the daily report for gold. We do have gold under pressure this morning, currently trading down about $5 to $6 at 1500, 1501. As you can see, we are looking at a daily chart. In this daily chart, you can see the day's activities. That's this red candle, which signifies a down day. On this, green is up, red is down. It is the more traditional in terms of the way that the U.S. technicians look at it. Of course, I like to look at red and black, but I have had comments that people find this easier to read. On today's report, we are going to talk about the types of corrections that are most common within the market, what we think we can expect here, how this latest correction might work itself out, and do that all on today's daily report. Now, it is, of course, my belief right now that we have probably gone through this last wave 3 in terms of this impulse wave. We got our 5 count, 1, 2, 3, 4, and 5. The second thing that gives me at least some technical evidence that we might be there is in terms of what I was looking for as a upper level target. Now, as you know, this line has been here for some time, and even when it wasn't, it's simply a comparison of wave 1. You can obviously see that we've come very, very close to that point, and to me within $2, which is where we're at. I think the high was 18 and this goes to 20, so I believe that we're there, and it's quite possible in fact that we have in fact seen a conclusion to wave 3. Now, the only way that wouldn't be is if we have an extension. We can deal with that on another day, but let's talk about corrections. A typical correction is always going to have what's called an ABC count, whereas this was 1, 2, 3, 4, 5, in other words 5, on a correction within the impulse cycle itself is typically a 3 count. So you will typically get an A, a B, and then a C. That's what's known as a standard correction. In a standard correction, what you look at is that the low that it makes is going to be on the C wave. You're going to get this B, what's known as a impulse wave, but it's an impulse wave counter to the trend, because in a correction, of course, in a bullish correction such as this, that trend is actually lower. And of course, this right here, this is your A wave here. So that's one way that the market can work itself out. Now, another standard way that R.N. Elliott had pointed out is really very, very similar to the pennant or wedge formation. And I talked about this a little bit in our silver forecast this morning. But what you typically see in this wedge or horizontal type correction is it's composed of 5 waves, but they're very, very short, in which you'll get 1, 2, 3, 4, and then 5 if the market was going down. If the market is going up, you get the opposite. So what you'll get is 1, 2, 3, 4, and then your 5th wave, of course, is that breakout wave, and it forms really a triangle or wedge formation. And so this is what's known as a flat correction. So that's the secondary choice in terms of common corrective types. If you actually go ahead and look at R.N. Elliott's Masterworks, for example, he lists 6 different types of possible corrections. But what I've found in my research is typically it's one of these 3. The third type of correction is simply called a flat correction, in which you'll get a wave down, you'll get a B wave up, and then the final C, rather than it making a lower low, makes an equal low to that of A, so that A and C both have equal lows. Those are, to me, what I have seen in terms of corrections, and they are the most prominent of corrective types. Now, if we look at sustained corrections within the market, and you can see this as we entered, this is, of course, a major correction, and I want to distinguish between the two. On a major correction, and a major correction such as going from major 3 to major 4, you're going to get the ABC, but the ABC is going to be much more pronounced. A, B, and C, and you can see how long it took to actually weather that. However, the type of correction we're looking at is not a correction in major waves. It is rather a smaller correction such as we got here from 1 to 2. This is the type of correction that I would be looking for. So what you typically got here is you got your A, you got your B, and then your C wave down. This is the type of correction that we will probably witness here. We are not looking at a big corrective period, in other words, going into a corrective phase or a larger section. Rather, it's going to be something like this. In other words, this is going to go from 3 to 4 just as this went from 1 to 2. That is more appropriate in terms of the type of correction that we are looking for. So we did enter the trade at 1503. We did get stopped out at 1497. The loss on that trade was $6. I think the last trade was plus 23, and the trade before that was plus 20. So we're well ahead of the game. And my sentiment yesterday, even if this market recoups and we end up buying the breakouts again, my sentiment was that I saw these markets under pressure. And my sentiment was that we were due for a correction. That was based upon the technical information that I presented at the beginning of this program, meaning the fact that we had effectively hit our 5 count, 1, 2, 3, 4, 5. We were in wave 3, and that now we should probably experience an A, B, and C correction. Where will those take us? Well, that's going to be the discussion that we'll be looking at over the next week. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange.